Given the price history and forecast for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The price history shows a general upward trend, with recent dips followed by recoveries. The forecast suggests continued upward momentum, reaching $102,000 in the coming weeks. This aligns with a long-term bullish outlook for Bitcoin. Therefore, a long position is recommended, with an entry price around $98,000. This allows for a small buffer below the current price and the recent dip. A stop loss should be placed at $94,500, slightly below the strong support level identified at $94,552.42. The target price should be set at $102,000, aligning with the forecast and capturing potential gains from the projected upward movement. This strategy capitalizes on the bullish sentiment and aims for substantial long-term returns. Based on the provided information for Bitcoin Cash, a short-term investment strategy appears most suitable. The 2-week price change shows volatility, with a recent dip followed by a slight rebound. The forecast predicts a slight decline over the next week, suggesting a potential continuation of the downward trend. Considering the support price at $427.60 and the resist price at $531.1, an entry price around $440, slightly above the recent lows and below the forecast average, would be appropriate. A stop loss could be placed at $447, just above the recent high, to limit potential losses. The target price could be set at $420, aligning with the support level and the projected price decline. This strategy capitalizes on the anticipated short-term downward movement while managing risk through a defined stop loss. Based on the provided price information for stacks, a cautious investment strategy focusing on the short term appears most suitable. The 2-week price history shows a clear downward trend, with the forecast predicting further declines. While the support price at $1.453 offers a potential floor, the recent price action suggests a higher probability of continued downward movement. Therefore, a short position is recommended, aiming to capitalize on the anticipated price decline. An entry price around $1.54, near the recent lows, would allow for a quick entry into the trade. A stop loss should be placed at $1.61, slightly above the current price, to minimize potential losses if the market unexpectedly reverses. The target price could be set at $1.45, aiming to capture a significant portion of the predicted decline. This strategy emphasizes risk management and capitalizes on the current bearish sentiment surrounding stacks. Based on the provided Ethereum price history and forecast, a cautious short-term investment strategy appears most suitable. The recent price history demonstrates volatility, with a notable downward trend. While the forecast suggests a slight upward movement in the coming week, the historical data indicates a stronger possibility of continued downward pressure. Therefore, a short position on Ethereum is recommended. An aggressive entry point could be around $3,280, aligning with the recent price fluctuations. The stop loss should be placed slightly above the entry price at $3,310 to mitigate potential losses. The target price could be set around $3,130, taking into account the support level and the overall bearish sentiment indicated by the historical data. This strategy aims to capitalize on the potential for further price declines in the short term while managing risk through a well-defined stop loss. Given the price trends and forecast for Ripple, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a clear upward trend, with the current price hovering near its recent highs. The forecast indicates continued upward momentum, suggesting that Ripple could reach prices around $3.46 in the coming weeks. This suggests a bullish outlook for Ripple in the medium term. Therefore, a long position is recommended. An entry price of $3 would allow you to capitalize on the upward trend. The stop loss should be set at $2.90 to protect against any unexpected price pullbacks. The target price should be $3.40, aiming to capture a significant portion of the forecasted price increase. This strategy balances risk and reward, allowing you to participate in the potential upside of Ripple while mitigating potential losses. Given the price trends and forecast for Binance Coin, a cautious investment strategy would focus on a medium-term approach. The historical prices show some fluctuations, with a recent dip followed by a slight recovery. The forecast suggests a potential consolidation period, with prices hovering around the current levels. The support price of $702.03 provides a floor for potential downside, while the resistance at $714.79 indicates an upper limit for potential upside. This suggests that Binance Coin might not experience significant price movements in the short term. Therefore, a long position is advisable for a medium-term investment strategy. An entry price of $708 would allow you to buy in at a relatively attractive price, considering the forecast and the current market sentiment. The stop loss should be set at $702.03 to protect against a potential drop below the support level. The target price could be set at $714.79, aiming to capture the potential upside towards the resistance level. This strategy allows for a moderate risk-reward ratio while capitalizing on the potential for gradual price appreciation in the medium term. Based on the provided information for Stellar, a medium-term investment strategy appears to be the most suitable. The historical price data shows a recent upward trend, but the forecast suggests a slight pullback before continuing its upward trajectory. The support price at $0.4213 provides a solid foundation for the potential price increase, while the resistance at $0.5543 indicates a potential ceiling for the short term. Therefore, I recommend taking a long position on Stellar with an entry price around $0.440, aiming to capitalize on the anticipated price increase towards the resistance level. A stop-loss order should be placed at $0.4213 to limit potential losses if the price drops below the support level. The target price for this strategy could be set at 50 cents, allowing for a moderate profit while still leaving room for further price appreciation. This medium-term approach allows you to benefit from the potential upward momentum of Stellar while managing risk effectively. Given the price trends and forecast for Toncoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent downward trend, with the current price hovering near the support level of $5.302. While the forecast suggests a slight recovery in the coming week, the overall trend remains bearish. In this scenario, a short position could be considered to capitalize on the potential for further price declines. An ideal entry price for a short position would be around $5.45, slightly above the current price and close to the resistance level of $5.626. The stop loss should be set at $5.55 to protect against any unexpected price surges. The target price could be set at $5.25, aiming to profit from a moderate decline towards the support level. This strategy allows for a limited risk exposure while potentially capturing gains from the anticipated downward movement in Toncoin's price. Based on the historical price and forecast for Cardano, a medium-term investment strategy appears to be the most suitable. The historical data reveals a fluctuating trend with recent upward movements. The forecast suggests continued upward momentum, with prices potentially reaching $1.13 in the coming weeks. However, the price action also indicates some volatility, suggesting the need for a measured approach. Therefore, a long position is recommended. An entry price of $1.08 aligns with the current price and the forecast. A stop loss at $1.0558, just below the support level, will protect against significant downside risks. The target price should be set at $1.1233, slightly below the resistance level, allowing for potential profit-taking before encountering strong selling pressure. This strategy allows for capturing potential gains from the upward trend while managing risk effectively. Given the price trends and forecast for Litecoin, a medium-term investment strategy appears suitable. The historical price data shows a clear upward trend, with recent fluctuations indicating consolidation. The forecast suggests continued growth, with prices potentially reaching $127 in the coming weeks. The support price of $123.80 provides a safety net, while the resistance at $131.1 presents a potential ceiling for the short term. Therefore, a long position is recommended to capitalize on the anticipated price increase. An ideal entry price would be around $117, allowing you to buy in before the projected price surge. A stop loss could be placed at $114 to limit potential downside risk, while a target price of $128 could be set to secure profits as the price approaches the resistance level. This strategy allows for a balance between risk and reward, aiming to profit from the expected growth in Litecoin's price over the medium term. Based on the provided price information for SWAY coin, a cautious investment strategy is recommended. The 2-week price history reveals a fluctuating trend with no clear upward or downward momentum. The forecast price suggests a slight downward trend over the next week. Considering the current price hovering near the support level of $4.6146, it indicates a potential for further price decline. Therefore, a short-term short position is advisable to capitalize on this anticipated downward movement. An optimal entry price for this strategy would be around $4.85, slightly above the current price, allowing for some initial price fluctuation before entering the position. The stop loss should be set at $4.95 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $4.55, aiming to capture a significant portion of the potential downside movement while staying mindful of the support level. This strategy allows for a calculated risk with a defined entry, exit, and risk management plan, making it suitable for a short-term investment horizon. Based on the provided price information for Aptos, a cautious investment strategy would be appropriate. The 2-week price change shows a slight downward trend, and the forecast predicts further declines in the coming week. While the support price at $8.47 offers a potential floor, the resistance at $11.64 suggests limited upside potential in the near term. Considering these factors, a short-term investment approach with a short position is recommended. An entry price around $9.20, slightly above the recent lows, would allow for a potential profit if the forecast plays out. The stop loss should be set at $9.40 to mitigate risk if the price unexpectedly rises. The target price could be set at $8.60, aiming to capture a portion of the anticipated decline. This strategy prioritizes risk management while seeking to capitalize on the short-term bearish outlook for Aptos. Remember that this is just a suggestion, and thorough research and personal risk tolerance should always guide investment decisions. Given the price trends and forecast for SAY, a cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a downward trend, with the forecast indicating further declines. The price is currently near its support level of $0.3989, suggesting a potential for further downward movement. The resistance at $0.463 indicates a significant barrier for upward price movement. In this scenario, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $0.410 would be ideal, aligning with the forecasted price. The stop loss should be set at $0.425 to protect against any unexpected price recovery. The target price should be set at $0.380, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.3989. This strategy aims to capitalize on the short-term bearish momentum while mitigating risk with a well-defined stop loss. Based on the provided Ethereum Classic price history and forecast, a cautious short-term investment strategy appears most suitable. The recent price history shows a slight downward trend, with the current price hovering around $26. The forecast suggests this downward trend might continue, with prices potentially dropping to around $25. This indicates a bearish outlook in the short term. Given this outlook, a short position on Ethereum Classic is recommended. An entry price of $26.1 would allow for entry at the current market price with a stop loss set at $26.80 to protect against any unexpected upward movement. The target price should be set at $24.80, allowing for potential profit before the price reaches the support level of $25.47. This strategy aims to capitalize on the anticipated price decline while managing risk through a well-defined stop loss. Given the provided price history and forecast for Polygon, a cautious short-term investment strategy appears most suitable. The price history demonstrates a downward trend, with recent fluctuations hovering around the 46 cents range. The forecast suggests this downward trend might continue, with prices potentially reaching $0.461 in the coming week. Considering these factors, a short position on Polygon could be considered. An entry price around 47 cents, slightly above the current price, would allow for a buffer against immediate price fluctuations. The stop loss should be set at $0.475 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.455, aiming to capture a portion of the anticipated price decline. This strategy prioritizes risk management and capitalizes on the prevailing bearish sentiment surrounding Polygon. Given the price trends and forecast for AEVO, a cautious investment strategy would focus on a short-term approach. The historical prices show a consistent downward trend, with the current price near its forecast and close to the support price of $0.3069. The resistance is at $0.362, indicating that an upward breakout is unlikely in the near term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For this strategy, an entry price of $0.329, aligned with the current price, would be appropriate. The stop loss should be set at $0.335, slightly above the current price, to protect against any unexpected price increases. The target price should be set at $0.307, slightly above the support price, allowing you to take profits before the market hits major support. This approach aims to minimize risk while capturing potential short-term profits from the anticipated price decline. Given the price trends and forecast for optimism, a cautious investment strategy would focus on a short-term approach. While the historical prices show some fluctuations, the recent downward trend and the forecast indicating further decline suggest a bearish outlook in the short term. The support price sits at $1.731, indicating a potential floor for the price. However, the resistance at $2.107 signifies a significant hurdle for any upward movement. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $1.84, slightly above the recent price and below the forecast high, would be a suitable starting point. A stop loss could be set at $1.90, protecting against unexpected price surges. The target price should be set at $1.75, aiming to capture a potential decline towards the support level while leaving room for price fluctuations. This strategy aims to take advantage of the short-term bearish trend while managing risk through a well-defined stop loss. Based on the provided data for STRK, the historical price demonstrates a consistent downward trend. The forecast further indicates a continuation of this downward movement, with prices projected to decline over the next week. The support price of $0.4111 presents a potential floor for the price, while the resistance at $0.4689 suggests limited upside potential. Considering this bearish outlook, a short-term investment strategy focusing on a short position seems appropriate. To implement this strategy, an entry price of $0.435 could be considered, slightly above the recent lows and aligning with the projected price decline. A stop-loss order should be placed at $0.448 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.411, aiming to capture a portion of the anticipated downward movement. This strategy capitalizes on the bearish sentiment and projected price decline of STRK over the short term. Given the price trends and forecast for Solana, a cautious investment strategy would focus on a short-term approach. The historical prices show some fluctuations, but the current price is close to the forecast and near the support level. The resistance is at $216.43, indicating that there is limited room for upward movement in the short term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For a short-term investment strategy, an entry price of $213 would be ideal, aligning with the recent price dip. The stop loss should be set at $216, protecting against any unexpected price recovery. The target price should be set at $185, slightly above the support level, allowing you to take profits before the market hits major support. This strategy aims to capitalize on the potential for a short-term decline in price while managing risk effectively. Based on the provided price information for Jupiter, a cautious investment strategy with a short-term perspective is recommended. The 2-week price history reveals a downward trend, with the forecast projecting further declines. The support price sits at $0.772, suggesting a potential floor for the price. However, the resistance level at $0.9532 indicates a significant barrier to upward movement. Given this outlook, a short position is advisable to capitalize on the anticipated price decrease. An entry price of $0.838, slightly above the recent price action and below the resistance level, would allow for a potential profit as the price moves towards the support level. The stop loss should be placed at $0.859, above the recent highs, to limit potential losses if the price unexpectedly rallies. The target price should be set at $0.794, aligning with the forecasted price decline and providing a reasonable profit margin. This strategy focuses on short-term gains by leveraging the anticipated downward price movement of Jupiter. Based on the provided information for render, a cautious investment strategy would be most suitable. The 2-week price change shows a fluctuating trend with no clear upward or downward momentum. The forecast suggests a slight decrease in price over the next week, indicating a potential for short-term weakness. Considering the support price at $6.978, it would be prudent to adopt a short-term bearish position, anticipating a price decline towards this level. An entry price of $7.20 would allow for a slight buffer above the current price, minimizing the risk of immediate losses. The stop loss should be set at $7.36, the highest point in the recent price fluctuations, to protect against unexpected upward movements. The target price would be $6.98, aiming to capture a portion of the potential price decline towards the support level. This strategy prioritizes risk management and capital preservation over aggressive profit maximization. Based on the provided price information for Solana name service, a cautious investment strategy is recommended. The 2-week price history demonstrates a clear downward trend, with the recent forecast suggesting further decline. While the support price at $0.2103 offers a potential floor, the resistance at $0.2441 signifies a significant barrier to upward movement. Considering this bearish outlook and the potential for continued price drops, a short position appears to be the most suitable approach. To implement this strategy, an entry price near the current market price, around 22 cents, would be advisable. A stop-loss order should be placed above the recent high, at approximately $0.236, to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.2103, aligning with the identified support level, allowing for a measured profit as the price potentially drops towards this floor. This strategy prioritizes risk management and capital preservation while aiming to capitalize on the anticipated downward price movement of Solana name service. Based on the provided Doge-Coin price information, a short-term investment strategy appears to be the most suitable approach. The recent price history shows volatility with a slight downward trend. The forecast price suggests a potential increase in the coming week, but the upward movement is expected to be modest. Considering the support price of $0.3365 and the resistance price of $0.38615, a short-term buy-and-hold strategy could be employed. An entry price near the current price, around 35 cents, would allow for potential gains if the forecast price holds true. A stop-loss order could be placed at $0.337 to minimize potential losses if the price drops below the support level. The target price could be set at $0.385, aiming to capture a portion of the potential upward movement before the price potentially encounters resistance. This strategy allows for a balanced approach, taking advantage of the potential for short-term gains while mitigating risk through a well-defined stop loss. Based on the provided price information for PEPE, a cautious investment strategy is recommended. The 2-week price history reveals a downtrend, with the price consistently declining. Although the forecast suggests a slight stabilization around $0.0000182, the historical price data indicates a lack of strong upward momentum. Furthermore, the support price is relatively close to the current price, suggesting limited room for significant price increases. Considering these factors, a short-term investment strategy with a short position is advisable. An entry price around $0.0000182 aligns with the forecasted price, while a stop loss at $0.0000183 protects against potential upward price movements. The target price should be set at $0.0000175, the support price, to capitalize on the anticipated downward trend. This strategy aims to minimize risk by entering at a relatively low price point and exiting before the price potentially rebounds. Given the current price trends and forecast for SHIB, a cautious investment strategy would be advisable. The 2-week price change shows a slight downward trend, while the 1-week forecast indicates further declines. Although the price is hovering near its support level, the resistance is relatively far away. This suggests that the short-term outlook for SHIB is bearish. Therefore, a short position would be more suitable for this scenario. An entry price of $0.0000220 could be considered, aligning with the forecasted price. The stop loss should be set at $0.0000228 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.0000210, aiming to capitalize on the anticipated decline towards the support level. This strategy emphasizes risk management and aims to profit from the short-term bearish momentum in SHIB. Given the price trends and forecast for Doge-Coin, a conservative investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The support price sits at $1.493, while the resistance is at $1.818. This suggests a bearish outlook in the short term, making a short position potentially suitable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve an entry price of $1.78, aligning with the recent price action and the forecast. The stop loss should be set at $1.818 to protect against any unexpected price recovery. The target price should be set at $1.56, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $1.493. Remember to always manage your risk and consider your personal investment goals and risk tolerance before making any investment decisions. First, based on the provided price history and forecast for Litecoin, a short-term bearish investment strategy appears to be the most suitable. The historical price data shows a downward trend over the past 2 weeks, with the forecast indicating further declines in the coming week. The price is currently hovering near the resistance level of $0.006575, suggesting a potential for a pullback. Therefore, an aggressive short-term strategy would involve entering a short position at the current market price around $0.0063. A stop-loss order should be placed at $0.00658 to limit potential losses if the price unexpectedly rises. The target price for this short position could be set at $0.00579, aligning with the lowest projected price in the forecast, allowing for a profit while minimizing the risk of holding through a potential bounce. This strategy capitalizes on the anticipated downward movement of Litecoin within the short term. Given the price trends and forecast for Near Protocol, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a volatile trend with recent declines, while the forecast suggests further modest declines in the coming week. The support price at $4.754 indicates a potential floor for the price, while the resistance at $5.999 suggests limited upside potential in the short term. Therefore, a short position is advisable to take advantage of the anticipated price decrease. An entry price of $5.10 aligns with the forecast and provides a reasonable margin for profit. The stop loss should be set at $5.25 to protect against any unexpected price rallies. The target price should be set at $4.85, allowing for a potential profit while staying below the significant support level. This strategy aims to capture short-term price movements within a volatile market. Given the provided price information for Internet Computer, a cautious investment strategy is recommended. The 2-week price change shows a downward trend, and the 1-week forecast indicates continued declines. While the support price is at $9.79, the resistance is at $11.057, suggesting limited upward potential. Therefore, a short position is advisable to capitalize on the anticipated price decline. An entry price of $10 would allow you to enter the market near the current price, with a stop loss set at $10.50 to minimize potential losses. The target price should be $9.80, slightly above the support level, to secure profits before the price potentially rebounds. This strategy aims to take advantage of the short-term bearish outlook for Internet Computer while managing risk effectively. Based on the provided injective data, a short-term investment strategy appears most suitable. The 2-week price history demonstrates a slight downward trend, and the 1-week forecast predicts continued consolidation around the $22 price point. The current price is hovering near the support level of $20.18, suggesting a potential for a further dip before any significant upward movement. Therefore, a short position on injective is recommended. A conservative entry price could be $22.50, allowing for a small buffer above the current price. The stop loss should be set at $23.12, slightly above the resistance level, to minimize potential losses if the price unexpectedly rises. The target price could be $20.50, aiming to capture a portion of the potential downward movement before reaching the support level. This short-term approach capitalizes on the current bearish sentiment while mitigating risk with a well-defined stop loss. The provided historical price data for BTC shows a volatile trend with both upward and downward movements. The forecast indicates a slight downward trend over the next week. Considering the forecast and the support price of $417.80, a short-term bearish strategy appears more suitable. We recommend opening a short position at the entry price of $447, aligning with the forecasted price and allowing for potential profit as the price potentially declines. The stop loss should be set at $459 to minimize potential losses if the price unexpectedly rises. The target price should be set at $420, which is below the support price and represents a reasonable profit target. This strategy capitalizes on the anticipated downward movement while managing risk effectively. Given the price trends and forecast for THETA network, a cautious investment strategy would focus on a medium-term approach. The historical prices show a recent downward trend, with the current price hovering near the support level of $2.224. The forecast suggests a slight upward movement in the coming weeks, but the overall trend remains uncertain. In this scenario, a long position could be considered with a cautious approach. An entry price around $2.25 would allow you to buy in near the support level, minimizing risk. The stop loss should be set at $2.18 to protect against further price declines. The target price could be set at $2.40, aligning with the forecast and providing a reasonable profit margin. This strategy allows for potential gains while mitigating risk by taking advantage of the potential for a price rebound while remaining mindful of the uncertain market conditions. Given the provided price information for WorldCoin, a cautious investment strategy with a short-term perspective appears most suitable. The 2-week price history demonstrates a clear downward trend, and the forecast predicts further decline in the coming week. The current price is hovering near the support level of $2.099, suggesting a potential bounce. However, the forecast indicates that this bounce might be short-lived, with prices likely to fall below the current level. Therefore, a short position is recommended to capitalize on this anticipated decline. An entry price around $2.16, slightly above the current price, would allow for a small margin of safety while still benefiting from the downward trend. The stop loss should be set at $2.22, slightly above the recent resistance level, to limit potential losses if the price unexpectedly rebounds. The target price could be set at $2.05, aligning with the forecast and providing a reasonable profit margin before reaching the support level. This strategy allows for a short-term gain while mitigating risk by setting clear entry, stop loss, and target prices based on the available price information. The price history of Hooked Protocol suggests a downtrend over the past 2 weeks, with the forecast indicating further declines. The current price is hovering near the support level of $0.3532, suggesting a potential buying opportunity for a long-term investment strategy. Despite the recent downward trend, the historical price data reveals periods of consolidation and minor upward movements, indicating potential for a rebound. Therefore, I recommend a long-term investment strategy with an entry price of $0.3532, aligning with the support level. The stop loss should be set at $0.344, slightly below the lowest forecasted price, to minimize potential losses. The target price can be set at $0.4044, the resistance level, aiming to capitalize on a potential price surge. This strategy allows for a gradual accumulation of Hooked Protocol at a potentially undervalued price, with the potential for significant returns if the price recovers and surpasses the resistance level. Given the historical price data and the provided forecast for Artificial Superintelligence Alliance, a short-term bearish strategy appears to be the most suitable approach. The price has been steadily declining over the past 2 weeks, and the forecast indicates further downward movement. While there is support at $1.245, the resistance level at $1.37 suggests limited upward potential. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price of $1.34. The stop loss should be placed at $1.37 to limit potential losses if the price unexpectedly rises. The target price for this strategy would be $1.25, aiming to capture a significant portion of the anticipated price decline. This strategy capitalizes on the prevailing bearish trend and the forecast's indication of further downward movement in Artificial Superintelligence Alliance. Given the price trends and forecast for Polkadot, a cautious investment strategy would focus on a medium-term approach. The historical prices show a downward trend in the recent 2 weeks, with the forecast indicating further declines in the coming week. While the current price is near the support level of $6.85, the resistance at $7.742 suggests that overcoming this hurdle might be challenging in the short term. Therefore, a short position is advisable for this medium-term strategy. An entry price of $7 would allow you to capitalize on the potential for a price decline towards the support level. The stop loss should be set at $7.20 to protect against any unexpected price recovery. The target price should be set at $6.50, aiming to capture a significant portion of the anticipated decline. This approach balances risk and potential reward, allowing for a moderate profit if the forecast holds true. Based on the provided Filecoin price information, a cautious investment strategy suggests a short-term position. The 2-week price change shows a fluctuating pattern, with recent dips indicating a potential bearish trend. While the forecast suggests a slight upward movement, it remains within a relatively narrow range, signaling limited upside potential. Furthermore, the current price is close to the support level of $5.451, suggesting a possible bounce before a further decline. Therefore, an entry price of $5.48, slightly above the support level, would allow for a small margin of safety. A stop-loss order should be placed at $5.66, above the recent resistance and the forecast high, to minimize potential losses. The target price would be set at $5.25, aiming to capture a potential short-term decline. This strategy prioritizes risk management and capital preservation by focusing on a short-term opportunity with a defined risk-reward profile. Based on the provided price history and forecast for Conflux, a cautious short-term investment strategy appears most suitable. The recent price action shows a downward trend, with the forecast indicating further declines. While the price briefly touched a high of 18 cents, it has since fallen back below 15 cents. The support level at $0.1562 suggests a potential floor for the price, but the forecast suggests a continued downward movement towards $0.154. Therefore, a short position is recommended, aiming to profit from the anticipated price decline. An entry price around $0.158, slightly above the current price and the support level, would allow for a small margin of safety. The stop loss should be set at 16 cents, limiting potential losses if the price unexpectedly rebounds. The target price could be set at $0.154, aligning with the forecast's lowest price prediction. This strategy prioritizes risk management and capital preservation while seeking to capitalize on the bearish momentum observed in Conflux's price action. Given the price trends and forecast for Ethereum name service, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $33.05. The forecast suggests a continuation of this downward trend, with prices expected to remain around $33. The resistance level at $37.08 indicates that a significant upward move is unlikely in the near term. Therefore, a short position is advisable to capitalize on the potential for a price decline towards the support level. An entry price of $36 would allow you to enter the trade at a relatively attractive level, with a stop loss at $37 to protect against any unexpected price surge. The target price should be set at $32, aiming to capture a reasonable profit from the anticipated downward movement. Based on the provided avalanche data, a short-term investment strategy appears most suitable. The historical price data reveals a recent downward trend, with prices fluctuating around the $36 to $40 range. While the forecast suggests a slight rebound, it remains within this relatively narrow range, indicating limited upward potential in the short term. Therefore, I recommend a short position on Avalanche. A strategic entry point would be around $39, aligning with the recent price action and the forecasted price range. Setting a stop loss at $40 would protect against any unexpected upward movement. The target price could be set at $35, capitalizing on the potential for a decline towards the support level. This approach aims to profit from the anticipated short-term price correction while managing risk effectively. Given the price trends and forecast for Vecane, a cautious investment strategy would focus on a medium-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the forecast indicating a potential for further minor declines. However, the price is currently hovering near its support level of $0.04302, suggesting a potential for a rebound. The resistance level at $0.05554 indicates that significant upward movement may be limited in the near term. Therefore, a long position is advisable for a medium-term investment strategy. An entry price of $0.045 would allow you to buy in at a relatively low point, with a stop loss set at $0.043 to protect against further downside movement. The target price could be set at $0.051, aiming to capitalize on a potential rebound towards the resistance level. This strategy allows for a balance between risk and reward, taking advantage of the potential for price recovery while mitigating the risk of significant losses. Based on the provided information for PENDLE, a bearish investment strategy is recommended. The 2-week price change reveals a downward trend, and the forecast anticipates further declines, suggesting a lack of upward momentum. The price history indicates a consistent drop, with the most recent price hovering near the support level of $3.714. Therefore, a short position is advisable. An aggressive short-term investment strategy could involve an entry price of $3.96, aligning with the current price. The stop loss should be set at $4.04, slightly above the recent high, to limit potential losses. The target price should be set at $3.71, the support level, aiming to capture the anticipated price decline. This strategy capitalizes on the bearish outlook and aims to profit from the predicted downward movement of PENDLE. Given the price trends and forecast for the sandbox, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent downward trend, with the forecast indicating further declines. The forecast suggests the sandbox could drop from its current price to around $0.602. The support price sits at $0.5529, and the resistance at $0.6198. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For a cautious short-term investment strategy, an entry price of $0.615 would be ideal, aligning with the forecasted price and near the resistance level. The stop loss should be set at $0.625 to protect against any unexpected price recovery. The target price should be set at $0.575, slightly above the support level, allowing you to take profits before the market hits major support at $0.5529. This strategy aims to minimize risk while maximizing potential returns in the short term. Given the price trends and forecast for Decentraland, a cautious investment strategy would focus on a medium-term approach. The historical prices show a volatile trend with recent fluctuations, and the forecast suggests a potential for further price adjustments. While the support price is at $0.4758, indicating a potential floor for the price, the resistance level at $0.534 suggests a limited upside potential in the near term. Therefore, a long position is recommended with an entry price around $0.495, slightly above the recent lows and close to the support level. This allows for potential upside if the price rebounds towards the resistance level. The stop loss should be set at $0.477 to protect against further price drops, while the target price can be set at $0.525, aiming for a moderate gain within the medium-term timeframe. This strategy balances risk and reward, taking advantage of potential price movements while mitigating potential losses. The current price trend for ENG Coin indicates a potential for short-term downward movement. While the price has shown some recent fluctuations, the forecast suggests a continued decline over the next week. The support price of $0.1911 acts as a potential floor for the asset, while the resistance at $0.209 presents a hurdle for any upward price action. Considering these factors, a short-term bearish strategy appears to be more suitable. To execute this strategy, an entry price of $0.204 would be appropriate, slightly above the current price and close to the resistance level. This allows for a quick entry if the price briefly spikes before continuing its downward trend. A stop-loss order should be placed at $0.213 above the entry price to limit potential losses in case the market unexpectedly moves upwards. The target price for this short position would be $0.1911, aligning with the support level and aiming to capture a significant portion of the anticipated decline. This strategy capitalizes on the short-term bearish sentiment and aims for a quick profit by riding the downward price movement. Given the provided price history and forecast for Uniswap, a short-term investment strategy appears most suitable. The historical price data shows a slight downward trend, with the price hovering around $13. The forecast indicates a continued consolidation around $14, suggesting limited upward potential. Considering this, a short position appears more promising. To execute this strategy, an entry price of $13.50 could be considered, slightly above the recent lows and in line with the current price action. The stop loss should be set at $14 to limit potential losses if the price unexpectedly rallies. The target price could be set at $12.75, aiming to capitalize on the anticipated downward movement towards the support level. This strategy aims to capitalize on the short-term weakness in Uniswap by taking a short position and exiting the trade once the target price is reached. Given the price trends and forecast for Chainlink, a short-term investment strategy focusing on a long position appears most suitable. The historical prices show a slight upward trend, with the current price hovering near the support price of $19.40. The forecast suggests a gradual increase in price over the next week, reaching $22. The resistance level at $25.50 indicates potential for further upward movement. This scenario suggests that Chainlink might experience a price increase in the near future. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current price of around $22. A stop loss could be set at $19.40, just below the support price, to protect against unexpected downward movement. The target price should be set at $25, aiming to capitalize on the potential for Chainlink to reach the resistance level. This strategy aims to capitalize on the anticipated price increase while minimizing potential losses. Given the price trends and forecast for Aave, a short-term investment strategy appears most suitable. The historical prices show a recent downward trend, with the current price hovering near the support level of $309.73. While the forecast suggests a slight upward movement in the coming weeks, it remains relatively subdued, indicating limited potential for substantial gains. Therefore, a short position is recommended to capitalize on the anticipated sideways movement or potential for further decline. An aggressive entry price of $310 would allow for potential profits if the price drops towards the support level. The stop loss should be set at $318 to limit potential losses if the price unexpectedly surges. The target price should be set at $300, aiming to capture a decent profit margin before the price potentially bounces back. Given the price trends and forecast for EOS, a short-term investment strategy appears most suitable. The historical prices show a downward trend, with the current price hovering near the support level of $0.7626. The forecast also suggests a continued decline, with prices potentially dropping to $0.852 in the coming weeks. This bearish outlook indicates that capitalizing on the potential price decrease could be a profitable strategy. Therefore, a short position on EOS is recommended. An aggressive entry point would be around 90 cents, slightly above the current price, allowing for some room for potential price fluctuations before entering the short position. A stop-loss order should be placed at $0.936, the highest recent price point, to limit potential losses if the price unexpectedly surges. The target price for this short position could be set at $0.783, aligning with the support level and the forecasted price decline. This strategy aims to capitalize on the anticipated downward price movement while managing risk through a well-defined stop-loss order. Based on the provided Tron price data, a cautious medium-term investment strategy appears most suitable. The recent 2-week price history shows a clear downward trend, with the forecast indicating further declines in the coming week. While the support price at $0.2086 suggests a potential floor, the current price is hovering near the lower end of the recent range. Therefore, a short position is recommended to capitalize on the anticipated price decline. An entry price around $0.233, close to the current price, allows for immediate participation in the potential downtrend. The stop loss should be set at $0.2404, the resistance level, to limit potential losses if the price unexpectedly rallies. The target price could be set at $0.2086, the support level, aiming to capture a significant portion of the anticipated decline. This medium-term approach allows for potential profit while mitigating risk by setting a defined stop loss and targeting a realistic price level. Given the price trends and forecast for Suncoin, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a downward trend over the past 2 weeks, aligning with the forecast, which predicts further declines. The current price is close to the support level of $0.02062, indicating a potential bounce. However, the resistance at $0.02328 suggests limited upside potential. Therefore, a short position is recommended to capitalize on the anticipated price decline. An entry price of $0.0226, slightly above the current price, allows for a small margin of safety. The stop loss should be set at $0.0232, above the entry price and resistance level, to protect against unexpected price surges. The target price could be set at $0.0207, slightly below the support level, allowing for potential profits before the price potentially finds support. This strategy acknowledges the bearish short-term outlook while aiming for a controlled risk-reward profile.